Ellie, it's good to have you on. Welcome, welcome.
Good to be here. Good. Thanks for having me on, Andy. Hello, everyone.
I was just about to go on a rant about how the roll-up has been focused a lot on, and the space is just on these somewhat unsexy things, but that we've been waiting for as an industry for years, like payments and like stable coins and like things like this that kind of come back to the core ethos. And I put out this tweet, return to fundamentals. Ellie, you're one of the more fundamentally driven humans that I've met, especially in the space. So I think it'd be actually quite refreshing to get your take from on the development of the space as broadly with regards to this kind of fundamental vision that you have for StarkNet, for StarkNet, for StarkWare, and just broadly. We've got digital asset treasury companies. We've got new L1s for kind of consortium chains. We've got all sorts of stuff kind of happening, and a lot of it has been around making trade-offs and trying to kind of operate in an institutional compliant way. It's a new era of crypto, of blockchain. Ellie, from the fundamental perspective, what is your current view of the space? And then we'll dive into a whole bunch of stuff.
So I'm really glad you're asking me, because here's a realization. I've been in this space for 12 years, right? I mean, I co-founded Zcash and then StarkWare. So like Zcash was in 2014, we started working on it. That was like 11 years ago.
Yeah.
Then working on StarkWare, we founded it in 2018. So that was like, 7 years ago. And the funny thing is, only about a month or two ago, I came to the following realization that I want to share with you and the listeners now. And is like this. So first of all, crypto does not yet have global product market fit. There are a few things that are working pretty well. I mean, Bitcoin is a store of value, another form of gold or some asset that people can access. There's maybe a little bit of stables, but the driving theme is speculation and hype. And that's not necessarily a bad thing. So what has been happening, and this happens time and again, is that there is a lot of anticipation for what blockchain can deliver. And then there's always the next hottest thing. And then you don't know right now what it is. I don't know what it's going to be in 2 months. But I'll tell you this. It's not going to be the stuff that is hot right now. And the reason I'm saying is because I've been here like 12 years, and the stuff that is hot now, be it Hyperliquid or Pump.Fun or, the DATs, were not hot 3 or 6 months ago, and they certainly were not hot a year ago. And the stuff that was hot a year ago isn't hot anymore. Now, why is this so? It is because the combination of speculation and often tokens being on top of stuff means that something will converge, like the new fashion. Now, it's not a bad thing. So we'll see something new emerge. Everyone's going to be talking only about that thing. It will drive a lot of funds into it. If that team is doing their job well, they will be able to accrue a little bit of value, and keep on working towards the long run. But the long run, what is it? It is the boring stuff that you mentioned. It is doing things like payments, proving our credentials, proving our integrity, stuff that is like day-to-day stuff, but it will be done on new rails that will be fully decentralized, not the sort of centralized versions or so on. Those are also hypes that will not stay long. It will be on fully decentralized things like Bitcoin, like StarkNet, things that have decentralization at their core, but at a global scale. And we're not there yet, but so we'll go through these fashionable things time and again. That's something I realized like 2 months ago. And it explains a lot for me about fundamentals and the nature of the industry.
Yeah, man. I mean, when I say return to fundamentals, I often think of just like the core principles of, because like I got in this space in 2017. We were, we were reading books about crypto, right? Like Chris Berniski had a book, and I was reading like Truth Machine and these types of things. And as you say, a lot of that has changed now into a more financialized kind of entrance into the space for a lot of participants, as well as a speculative entrance. I mean, your entrance to space was far deeper than mine, right? I was reading about the why and the how, and you were building the how. But at the end of the day, it's really shifted. And these things, these remittances, cross-border payments, these get a little bit of yield on your store value assets, be able to just borrow against assets to not have to pay taxes and realize capital gains. Do that in a, own your coins, own your keys, these types of things. And I mean, yeah, it's taken us, 15, years or so to get here, and it feels like we are there now, and it almost feels like a starting over, because I think we may have approached the adoption a bit wrong, and I'm curious to get your take, and then we can dive into some of the more recent happenings, which is we were so, and I think as a space, we were like, all right, we're going to build it. They're going to come and they're going to operate on our rails. And it wasn't until we like kind of flipped that where it's like, okay, why don't we have stable coins and then bring that to them? And then why don't we, have institutionally compliant permission set of a chain? Or why don't we really fought for as long as we could in terms of how we wanted to bring this technology to the world and to institutions. And then we were also faced up against really, really rough jurisdiction from the biggest government in the world, being the US. And then that kind of went to everywhere else. And that changed. And then we as an industry kind of grew up as well. We're like, well, we need to, build something that actually matters and that people do, use, and we need to, do that now. And it feels like in the last year, it's just been a massive shift. Maybe you can articulate that a bit better from the builder's perspective, but it does feel like we may have had a shift in the way that we see these technologies getting adopted, not just like, let's build it and eventually, we're the smartest, they're all just going to come use it. Ha ha ha. It's more of like, like, let's go be valuable to people in many areas, and then it'll kind of come.
Yeah, so I actually think that the end state will be closer to the new stuff that we're building and will be used. But I think that the current focus of the sort of speculative nature of getting excited about crypto is actually coming from a lot of traditional companies, TradFi, fintech, people in Wall Street companies and so on. It's not necessarily bad. It's very good. So they're coming. That explains the debts. That explains the desire to do things like stablecoins and so on. But I still view it as the next phase of this speculative thing that is leading us with every step closer and closer to the true and only end state that can be for crypto, and that is fully decentralized. You own your coins, you own your life. So all of the centralized stuff, the corporate chains, they're great. I think they help drive these things forward, but they are not the end state. They are just the current version of the hype, which is also explained by moving from a very anti-crypto regime in the US to the most pro-crypto one ever, and a lot of this institutional adoption. But it is still a step on the way. And let me just expand on that. When Facebook, for those of you around, back then it was called Facebook, today it's Meta. But when they announced the Libra and Diem, which was supposed to be this sort of basket of stable coins, this corporate kind of decentralized thing, on the day they announced it, I had this tweet that I'm very, very proud of. I said, this is immensely good for crypto, but it will not help Facebook and Meta. Like, it won't happen. And the reason it won't happen is there's something inherently disruptive about the way blockchain works that just doesn't go well with the current leaders and the current owners, right? Blockchain decentralization, you own your stuff, self-custody, no intermediaries. It goes face to face, head to head against what things like Facebook represents. So indeed, regulators come in, they stopped it, so on and so forth. I think similar things are going to happen again. So people are jumping on stables, are saying this is really great. All the banks of the world, all the financial institutions, they want to build their corporate chains. I think what will happen is this will be immensely good for crypto. It will not pan out the way these institutions and players are viewing it, right? Because at the very core, what crypto represents is a different trade-off. It is decentralization, true self-custodial nature, very little or minimal KYC. You can do whatever you want with no limits. I think just yesterday I saw a Stani tweet that something that the UK is now saying, stable coins should be limited at most 20,000.
Yeah.
This is to us in crypto, it looks ridiculous. Like, what are you guys thinking? But this will happen, right? This is what's going to happen. And then anything that is not decentralized, well, it will be put in a cage, slapped on with all the regulations that you see today in the TradFi world, and then you end up with something that is a lesser technology. It's more complicated, and people won't want. So I'm saying what we're seeing now is a very important step in this cycle of
Yeah.
the hype is now coming from stables, institutions, and so on, but it will drive decentralized crypto, which is not exactly what some of these folks hope they're going to achieve. That's my prediction.
Yeah, no, I think it's a good one. I think yeah, it is the hype this cycle is coming not from the crypto natives on crypto Twitter and in the builder community. In fact, I'd argue that some of the builders are just generally somewhat apathetic and just kind of like struggling in some capacity, just because I mean there is just a variety of things happening, and it's, sometimes you're in the limelight, sometimes you're not. There's a lot of competition, etc. And whereas the institutions are just like, wow, this is awesome. Like, this is a whole new market coming in and are excited about it. So, well, cool, man. One thing that I was thinking about as well recently was around how some of these treasury companies are actually going to be using their capital on chain. I think we recently saw a big raise, about like 1.5 billion from the Solana side. They're going to use that in DeFi. Some of the Ethereum folks are suggesting that they might use it. Not sure the timeline on kind of depositing. And then of course we have the largest ones being the Bitcoin ones. I understand that there is a Bitcoin staking product coming live from the StarkNet side relatively soon. And I asked you this in permissionless, so I think this is just another good update, because I know you've been busting your ass in New York City. How is, I guess like the question is, what is the update on the StarkWare, StarkNet institutional side for Bitcoin staking? Have you been bearing the fruits of your labor out there?
Yeah. So I'm very happy with my progress so far in New York. First of all, I love New York. This time of the year, also the weather is amazing, and I just love the whole experience, riding the city bike, seeing all the bustle. I love big cities. Okay, I want to answer about like DATs. Well, let me first of all answer about StarkNet, then answer something about DATs. So StarkNet, indeed, Bitcoin staking is going live at the very end of this month. And I know I'm speaking live here, and I don't want to spill any beans, but there's very exciting stuff that will be announced related to Bitcoin and StarkNet. Extremely exciting, retail facing, institution facing, asset allocator facing, that is in the works, in the final stages of development. And the announcement will be right around the same time, but I cannot say anything more about the details of that. I will say this: our commitment to Bitcoin and our actions towards expanding more, to do more and service Bitcoin more, are just gonna take a dramatic upshift. And I urge the listeners to do their own research and look into it. That's what I want to say about StarkNet and the exciting stuff that we have. Now I want to say something about DATs that is also somehow related to StarkNet. So the DATs are going to be, well, first of all, I had the honor of listening to Michael Saylor for the very first time in person last week. And I had this sort of like eureka thing that I understood what he's saying, or I think I understood. He has a thesis with two parts. The first part is something like this: Bitcoin is a highly volatile commodity that will outperform the stock market. Then if you buy into that thesis, the second part is claims and then financial engineering that says public corporations are the best tool for giving the public yield on an asset that is a commodity that is highly volatile and will outperform the stock market. And he certainly delivered on that. But the core of the thesis is that Bitcoin is a highly volatile commodity that will outperform the stock market. So I want to say something about StarkNet. Bitcoin is this amazing asset, but it has a huge problem, a ticking bomb, and it is seen with by the fact that it is very static. There is no financialization on Bitcoin or on Bitcoin-like technology happening today. It is like a big set of Rolex or a Picasso's. Only the very rich have it in personal control, and most of the public only accesses it through trusted parties. So this will change, and it will change by something that is Bitcoin-like, decentralized, has good UX and good scale. Okay, and it will not happen on the centralized exchanges. This financialization, this taking your Bitcoin, putting it as collateral, generating yield, doing a bunch of activities without asking permission from anyone and in a way that is very safe, this will take place on something that is a Bitcoin L2. And whichever Bitcoin L2 wins that. So it will also be a winner takes most, right? There's going to be one thing, one platform that will be the main Bitcoin settlement layer. I believe StarkNet is it. It is the best positioned one to be the Bitcoin settlement layer in terms of its alignment with Bitcoin, its ability to move fast, its scale, privacy, and good UX. So I'm very bullish on StarkNet as Bitcoin's settlement layer. And the conversations I'm having here are also around that and trying to get others to be enthusiastic about it. Again, no comments, but I'm optimistic.
Yeah. So when you are looking at this Bitcoin staking product, you're speaking with people there in the city. There's a lot of just institutional capital people that are, OGs in the space. I saw that you had a meetup with Dan Held recently as well. What has been the overarching sentiment towards products like Bitcoin staking, towards StarkNet? What are some of the questions that you're being fielded, right? Because I assume that a lot of it is around security, safety, but also just around Bitcoiners are a special breed where I think you fit the bill. I'm not sure I would fit the bill long term, but they want to know why. Like, they want to know that you're a diehard decentralization, anti-authority kind of figure. And so I'm just curious, in your conversations, right? Because a lot of this is relationship building, a lot of kind of B2B type of stuff. How have they been going? What have been the questions that you've been mostly getting? How have you been answering them? Just curious here.
The question is, there's so many so-called Bitcoin L2s that basically offer you various points and yields in their system on this stuff. So the questions are why is StarkNet different? And the answer is very simple. It's the best, the biggest in class, has been around the longest, most battle tested, highest security, highest long-term vision, alignment with Bitcoin. I presented ZK as the scaling solution and the privacy solution in 2013, 12 years ago. And the reason I got into this field was by encouragement from, Bitcoin OGs like Greg Maxwell, Mike Hearn at the time, and others. I think my long-term commitment to Bitcoin, my love of it, my support for it, is something that is well known within the sort of Bitcoin OG circle and developer circle, and then also the stuff. Basically, we showed the world that ZK is the end game. We, against all odds, said that ZK Starks, which are post-quantum secure, have minimal trust assumptions, no toxic waste, against the whole academic world and also the world of developers who were embracing less secure, more cumbersome elliptic curve cryptography, such as elliptic curve snarks. We, including teams like the Ethereum, basically canonizing and giving subsidies to those technologies. We still said, guys, math will win, and I think the integrity of math, the integrity of our team and our vision are recognized by Bitcoiners and others who have true blockchain ethos in their
Yeah.
hearts.
Yeah, I agree. I agree. And I think there is alignment there on principles. And I think you guys have been making the technical strides to embody that as well. Right. I mean, just recently, you guys did a ton of work to be basically become one of the first or the first, ZK L2, ZK rollup to, fully decentralize your sequencing process, right? Which for those who have been watching the rollup for the last 2, 3 years, understand that this has been the question for Ethereum L2s and just L2s in general. Is just on how are you going to move to stage one, stage two, decentralize your sequencer. Um, you did have a little bit of an outage. I saw a lot of tweets about it. Um,
Oh yeah,
if there's anybody out,
I want to speak to that because
yeah, if
what's
there's anybody
happening
out
is
there,
I think
yeah,
there are about 200 L2s on Ethereum, maybe even more. Last I counted,
yeah,
there's only one of them that is actively working on decentralization,
yeah,
and that is StarkNet. There's only one of them that treats its security as secure. What do I mean by that? All the other L2s, be they optimistic rollups or ZK rollups, don't actually trust their security. What do I mean by that? They all rely on things like trusted execution environments, committees. All of these are like, nice words for saying, well, you really trust the core team to be doing the right thing. We are the only ones who are doing decentralization effort seriously. We are the only ones who, from the start, have relied only on our ZK Stark technology, on its soundness and completeness to support state updates. So we are truly unique in that regard. Now, as you mentioned, yes, 2 weeks ago, we had a very major upgrade to our network that included for the very first time the Tendermint decentralized sequencing protocol going live. And we, of course, did this, on the fly for a live system with all of the backwards dependencies, introduced a fee market, EIP 1559 kind of pricing, moved the fee payment to be the Stark token without anyone noticing because of account abstraction. You actually have paymasters, so you can pay in any token you want. So users didn't notice anything about that. And a bunch of other things, reduced. We have pre-confirmation times of about half a second or less, block time down to 6 seconds. So it was a huge, huge upgrade. Now, going into it, we understood that because it's such a huge upgrade, and in spite of all the testing that one can do beforehand, there might be glitches. We were prepared for that. Indeed, we had two, I think, or maybe three outages. I think in total it was 9 hours over a few separate incidents. Very, very unfortunate. We would have preferred not to have that. Till then, we had never any outage on StarkNet, and that makes us also unique on that. But this is the price that you pay for innovating, and we proudly take this price because it is the only reason it happened is because we are pushing forward on our decentralization efforts, and we're the only ones to have a decentralization plan out there.
yeah. I mean, I think the community handled it well, and now it's if I understand correctly, it's past us, and the technical efforts that went into decentralizing the sequencer are complete
No, there are further
or
steps
very
along
close. Okay.
decentralization, increasing the number of nodes, putting more roles on the stakers and validators. So it will be a process that will have a few more steps with the next version upgrades. But
Yeah.
right now, we have moved from a sort of singular sequencer, which was the previous state, to having a mempool, a protocol between Tendermint protocol between several different sequencers, and we'll continue along this path.
Yeah, so yeah, it gets you close. And so are you gonna then have to be faced because right, the beauty of having one sequencer is okay, you really don't like consensus has just first in, first out type of thing, right? It's like it's just very easily like transaction ordering just becomes a matter of basically time and like sure there's latency wars if you're like sitting next to the sequencer and your computer's plugged into it, but like the reality is most users are distributed in a couple key jurisdictions with some outliers. But now that you were introduced kind of a more a mempool and introduce multiple kind of nodes slash sequencers, how like are you then faced with like the issues and overhead that comes with achieving consensus, or how do you kind of keep the scale?
Yeah, exactly. That's exactly what we're facing. It's the,
Yeah.
having a mempool, having several different versions, having to sort of decide on which one it is. Yes, communicating between the nodes, everything that comes with decentralization is
Yeah.
what we're now facing, and we're gonna move forward with it.
Yeah. Ellie, I don't know if you're running low on time. I think we just have a bit left. Just one last thing for you. When you're thinking about the broad adoption of StarkNet and some of the technologies that you've built, I had Justin Drake on yesterday. He told that story about ZK,
Yeah.
and kind of I had people from StarkNet comment, just say StarkNet, brother. It's very funny meme, always happens. What is your take on the privacy efforts of the space going forward? I think you guys have been pushing this hard. Finally, I think the regulatory environment is opening up for it, and I think people are really starting to understand the value in it as institutions come on chain, as big players want to interact in a permissionless yet somewhat private environment. How do you see this playing out now that we're kind of past the tornado cash days? We're past some of the anti-crypto regulatory regime days. How do you see this kind of actually being implemented into Ethereum, into Bitcoin, into general blockchains?
Yeah. So first of all, you mentioned the Justin Drake story. I'll tell you, the real version of the story. So he did reach out to me. He was one of there were 1,000 people who signed up to this conference that I ran back in the day when I was a professor at the time at the Technion. It was hugely oversubscribed. I managed to bring there Vitalik Buterin, Arthur Brightman, Zuko, Katie Hahn, Peter Van Valkenburg, and a bunch of others. And this person I didn't know anything of. I think he was with Alpha something. I forgot. It was part of was a decentralized marketplace. So this guy Justin Drake writes with some smart ideas, and I said, hey, I'm inviting you over, and moreover, StarkNet is very meritocratic, and I come from academic background. So if I see someone smart, I wanted to meet other smart people. So I said, Justin, even though you're not a speaker, basically was a nobody. I said, I want you to come over to the speakers dinner, and I sat him by Vitalik, and they started talking there. I'm very proud of that. And the initial connection, the way Justin, or the place where the first date that Vitalik and Justin had was at the speakers dinner of my event, and I'm very proud of that. And it's one of the matches that I helped sponsor. So now to your question about privacy. Look, as a co-founder of Zcash, I love privacy. I think it's extremely important. It's important for me, for my family, as we transact. So much of my transactions these days are through the Ready card, which is a great debit card that I use everywhere here in New York. But I need shielding for my personal expenses. So what's happening right now, to me, for a very long time, I've said this: privacy is not a problem of the ZK technology that has existed. We solved that a long time ago. It's a question of the UX, getting it so that you and I, when we use it, we won't feel a thing. And I think we have the solutions there on StarkNet today. So because of account abstraction, you can just replace in a seamless way the way your wallet works, where you will have the same good interface that you're used to, let's say, on the wallets on StarkNet, like Bravos and Ready. And you will have shielding out of the box without even noticing it. So we have these things already in production on StarkNet today, and the wallets are adopting them. And I think we'll make progress on that as well, because global adoption, I'm circling back to what you started with. The boring stuff that blockchain will end up being used
The
for,
unsexy stuff.
the unsexy stuff, but the important stuff will be these day-to-day payments and micropayments, and they will be done, first of all, in crypto over fully decentralized chains, not corporate chains. They will be done with amazing UX. They will have privacy as default, which you won't even notice. And if you ask, where can I see these things happening first? You know the answer. It is StarkNet.
Beautiful. Eli Ben-Sasson, co-creator of Zcash, StarkWare, Starks. the matchmaker of Vitalik and Justin Drake in an amazing way. Thank you for your time. Look forward to hopefully seeing you in New York. I'll be there in a couple weeks. I don't know if you're heading out soon. I know it's a shorter stint, but see you soon, man.
Forward to it.
Alrighty, man. Thank you.